Hi, this is Kerry Artag with Wicked Stocks bringing you the daily Tesla report for Thursday, February 22nd, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's jump into the charts. Big picture analysis, always important to start with that. The undercurrents, if you will, of the market itself, a 170.31, a targeted formation that we tested 3 weeks ago, still able to contain monthly, possibly quarterly selling pressures, and above which you should allow 253.25 over the next several months. When I say allow, that means you can prepare for that. You could be long Tesla, for instance, right now. Maybe you bottom picked this testing of long-term support in the mid to low 170s a few weeks ago. Then it was in the mid to upper 170s in anticipation of 253.25, and you're holding out for that. Now, what we are calling a clear-cut 3 to 5 week objective following the testing of that support level at 170.31 several weeks ago is a descending 1/3 speed line that is presently at 209.19. This speed line came into existence the moment the low was put in about 2.5, 3 weeks ago when we tested the 170.79 channel bottom. 209.19 remains a 3 to 5 week objective, and it is likely to be tested over the next couple of weeks above. We've made an adjustment here. We still have the 192.40 rising channel bottom. I have that as an intraday level only. We are now opting for the rising 2/3 speed line that came into existence several days ago when we put out that pullback high. I like this better. It's a softer angle line that gives it more reliability, if you will. I also like 187.56 because presently smack dab in the middle of the 50% and 5/8 downside Fibonacci from that early February low against the more recent high. So we're shifting to 187.56 as our support, able to contain weekly selling pressures, which is to say by now through next week, and above which we should over the next 1-2 weeks at the most test our targeted 209.19 speed line. And in fact, holding above 192.40 maintains a certain bullish momentum as we move through the rest of the week and into next. For the day itself, in fact, I'll just cut right to the day itself because everything about the day is shown here. We've got 192.40, your intraday support, solid support for day traders, above which 200.45 in reach, nothing more than the high settlement price from last week. It can contain intraday buying pressures. If we close above 200.45, we should tomorrow, Friday, actually test our targeted 209.19 speed line, where once again we can top out not only through next week, but even through the month of March, and from here fall back into the low 170s within 3 to 5 weeks of doing so. That's why I call this 253.25 channel top a 2 to 3 month possibility because it allows for the market to realistically top out in an intermediate sense at the 209.19 speed line and top out here for a full month. But I will say that if over the next week or so we happen to close above 209.19, we're just another 3 to 5 weeks away, say by the end of March, before reaching this 253.25 longer term channel top, where we can top out on a monthly, possibly quarterly basis and fall away again on a several month basis, on a 2 to 3 to 5 month basis. As I've been saying, we could trade inside this 170.31 to 253.25 area for many months to come, all the way into the third quarter perhaps. So once again, it really would be a settlement above 209.19 that would clearly indicate the low 250s within another 3 to 5 weeks. Until then, if you got long a few weeks ago when we were slipping into long-term support, and we'd mentioned how once we tested this 170.79 channel bottom, you should anticipate the 209.19 speed line, which, just a couple of weeks ago as well is in the upper 210s, 219 as I recall. And so we'd mentioned how this is an objective. If you're holding out for it, this is an area to take profits. And if you like trading both sides of the market, if you're a savvy options trader, let's say, and we're testing 209.19, you can liquidate your out of the money calls. Maybe you bought 210s or 215s a few weeks ago, and in turn, liquidate those, reverse, reach for 170, 175 strike out of the money puts that don't expire. I would go a couple of months out on that expiration. This could take every bit of 3 to 5 weeks to play out. We could trade inside this wedge for the next couple of months, perhaps. But once again, closing above 209.19, no good reason to be short Tesla as we move through March activity, then anticipating the 253.25 channel top within realistically 3 to 5 weeks. Let's get back to the day itself. Once again, 192.40 able to contain intraday weakness, 200.45 able to contain intraday strength. You can buy 192.40, sell 200.45, and vice versa. If we break 192.40, I think you can expect 187.56, where we can bottom out through next week, and from here round back up to 209.19 within a week or two of testing 187.56. It would be a settlement today below 187.56 that would pivot the market south into next week. I would then expect by the end of next week another test of that 170.79 channel bottom on the daily chart. On the weekly chart, as I've been saying, it's at 170.31, and you've got 177 and a quarter, of course, that precedes both a 5/8 Fibonacci from the January 23 low against the more recent July 23 high. That also held selling pressures several weeks ago when we tested this area. Last thing I'm going to say is over the next couple of weeks, 2 to 3 weeks, if we close below 170.31, that would need to be by a 1% margin for clarity on what would then be what I would consider to be a 2 to 3 month sell signal into the upper 90s, low 100 area. So if we were to close this week Friday at 168.60 or lower, which I don't see happening, and I don't think you do either, then it is, there's nothing to be but short Tesla, either out of the market entirely or short, because we should then fall into the upper 90s over the following 2 to 3 months. And if you bought those 210s or 250 strike out of the money calls, they should be liquidated, and you should in turn reverse, reach for 95 or 105 strike out of the money puts that don't expire for at least 6 months. But we are not in that scenario right now. I'm just giving you the what if. Right now, this is the dynamic at play over the next 3 to 5 weeks. And this is the dynamic at play really for today and over the next 1 to 2 weeks, as I've already described. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. We put out a stock pick on Wednesday in Disney. You should take a look at that. There's a good play that is setting up right now over the long term, near term as well, time horizons for Disney. Hasn't occurred just yet, but you want to know the conditions that are necessary for setting off a meaningful signal that should play out into later year. I'm going to leave it at that for, what is this? Thursday's Daily Tesla Report. You have a great day.